NVIDIA's GTC Live, bring you the highlights as well when we come back.
Testing 1, 2. Audio coming through. Nothing coming through. Okay, good. So here's my late day trading here. Took a long here, pull back, and up again. Failed to produce a new low. If you draw a line here, so I knew it was going to going higher. Then pull back again, start adding once it cleared this bar, as you can see here, adds. I start getting out this red bar here. Anybody traded today? Any big wins? Any big losses? Anything? Anybody? Okay, 345 is a gain.
We're back. NVIDIA's GTC conference underway with its Quantum Day front and center for investors. Christina Partsinevelos is there live and joins us now with today's highlights. Christina?
Well, Scott, NVIDIA CEO Jensen Huang really walking back his CES remarks from just 2 months ago, where he dismissed quantum computing as being 15 to 30 years away from practical use. NVIDIA demonstrating a renewed commitment by announcing today a new quantum computing lab in Boston. At today's Quantum Day roundtable, Jensen invited quantum computing executives to really explain why he was wrong, but several did actually just the opposite. Rigetti CEO said their technology is accessible on AWS and Azure, but still, quote, not good enough yet for any practical use. Jensen quickly cut him off when he said that. And then IonQ stated, his executive, that for the quantum industry, it's going to be another 10 to 15 years to get to where NVIDIA and all the other giants are. Rigetti, D-Wave, IonQ, quantum computing actually tumbled throughout the day and throughout the panel, and you can see almost all of them with Rigetti, I guess, the best out of the pack, only down about 9%. But today's sell-off really suggests that investors may not have fully grasped the reality behind the industry's marketing message of near-term practicality, Scott.
Yeah, those stocks have been so incredibly volatile. Christina, thank you very much for that. Christina Partsinevelos out at the NVIDIA event for us. Up next, we'll run you through what to watch for when FedEx and Lennar report at the top of the hour. Back after this.
Yeah, you're right. Losses are part of trading. I had a loss yesterday. I got it all back today. And then some. I lost 3K yesterday. And I got 45 today, so. It's part of the thing is I've been having a lot of issues with this streams. I think a lot of YouTubers have had problems. I've been saying, I don't know what's going on. It seems like maybe my hotkeys are interfering with the streaming software. I don't know. And actually, it's triggering the opposite trades I want to take. So if I want to go long, usually sells. So I got to look into this. That's why I have some. So I'm losing trades because of that. So I don't know. But so here's my fills. So I went long, like I said. Looks like a reverse head and shoulders. Also, you can look at that way, or see a trend down and then it fails to produce in your low, so you know it's going higher. So went higher, resistance, pull back, and up again. So but this move up off the open, I missed it. Man, I wish I was around. So we got 5 minutes till the close and they're pumping the price up. So it looks like we're probably gonna, I mean, 950, 960. Or not.
We're now in the closing bell market zone. CNBC senior markets commentator Mike Santoli here to break down these crucial moments of the trading day. Plus 2 earnings reports in OT. We are watching. Frank Collins got FedEx. Diana Olick with Lennar. Michael, I'll begin with you first. Your reaction to what Jeffrey Gundlach said, watching high yield spreads move wide a little bit, and the market's not done de-risking in his mind.
It's hard to say that absolutely that has all been cleaned out. This idea that you had excessive exposures. Goldman's out with some numbers saying hedge fund overall leverage still remains elevated even though they've cut back on their long exposure. So I do think, we sort of just touched those threshold levels of saying, yeah, we barely got overbought in a significant way, oversold in a significant way. Sentiment has definitely reset. But in terms of the macro piece of it, I do think we are very much on slowdown watch. It's going to feel like something like stall speed if we go down toward 1% GDP for half a year, whether we call it a recession or not, or whether there's downside from there. So I think that's where we are. And the question is, to what degree the market can sort of look through some of this stuff. I mean, barring some unexpected outbreak of certainty and clarity in the next couple of weeks, even the bulls who say that last week was a decent low are suggesting the market really has a lot to prove on the upside and probably can't get toward those old highs for a while.
Yeah, that's right. Still, as we've talked about, guilty until proven innocent. Frank Holland's watching FedEx. We said earnings are in OT. What do we need to watch?
Hey there, Scott. FedEx shares have actually underperformed the S&P and the Dow Transports, falling about 11% since its last earnings. Fears of an economic slowdown, also tariff concerns, they just continue to weigh on this stock. Revenue is expected to increase by about 1% year over year, while profits expected to grow by about 18% year over year. Really, the key metric here, Scott, it's guidance. FedEx lowered its full-year revenue and profit outlook last quarter. This time, those numbers and the commentary on the call are going to be really seen as a read on broader economic activity because FedEx has so much exposure not only to the U.S. economy but the global economy. FedEx has exposure to the U.S. consumer through its ground e-commerce business, exposure to business spend and international trade through its express division, and exposure to the manufacturing and industrial sector through its freight division that does LTL trucking. Back over to you.
All right, Frank, you let us know when the numbers hit. Appreciate that. Frank Holland, Diana Olick's watching Lennar. What do we need to know there?
Well, Scott, Lennar's stock has been hit hard in the past year as costs rise, but some analysts are suggesting its Q1 earnings could boost the builders entirely if it beats by just a little, as expectations are just so low right now for the builders. Tariffs, of course, are the wild card, some in place already and others that could happen early next month. I spoke with Lennar's chairman, Stuart Miller, last week about that.
Affordability has tested the ability to actually build production at margin. And tariffs are an overlay that will add to construction costs to the extent that they go into effect and take hold and remain permanent.
More important than the numbers will be commentary on what they're seeing in the all-important spring market. Builders also have much higher inventories now, so that'll be a focus as well. Scott?
Good stuff, Diana. Thank you very much for that. Diana, we'll look back with Mike Santoli. Got about 2 minutes to go. You'll see the animation in a moment. Utilities, just want your take there. Gabriela Santos talking about it as a place to be. Gunlock acknowledging the move there and saying, not a great signal.
Well, that's the thing, right? So the stuff that looks purely defensive, traditionally defensive, and when it does outperform, it usually does mean the overall index is going to struggle a little bit, and we're talking about a period of cloudy macro backdrop. I do think it makes much more sense to prefer utilities for stability and for dividend growth and yield than it does, runaway demand from AI. That story seems like it's taken a back seat at this point. But that's been the leadership, much of this year during this tumultuous period. Some of the traditional defensive. Again, it's one of those tricky things where banks are holding up okay. Yeah, credit spreads have softened up, but they're not really at worrisome levels just yet. You look at things like everything outside of the Mag 7, and it doesn't look like the market has struggled that much. Yet the S&P 500, it keeps hovering around these levels from the July highs, let alone, later part of last year. So I do think that's why you've kind of thrown a little bit of a wrench into this seamless bull story. And I do think that, the Fed meeting yesterday didn't necessarily provide much of an impetus one way or the other, but a Fed that's tolerant of slightly more inflation and ready to rescue the economy if needed is way preferable for equity holders. Equity holders can deal with 2.8% inflation by the end of this year. If it's sticky, that's much better than zero GDP growth.
Yeah, and that was the great point you made multiple times yesterday in your read of what happened in the Fed meeting. I mean, the market's kind of in no man's land a bit between now and April 2nd. Yeah. Let's see what happens with reciprocal tariffs.
Supposed to be seasonal strength during this time. We'll see if it happens.
All right, we'll see, Mike. Thanks so much. That's Mike Santoli. So we're going to go out, as you see, red on the board, giving back a little bit of what we did post-Powell and company yesterday. I'll see you on the other side into overtime with Morgan and John.
That bell marks the end of regulation. 100 black men of New York ringing the closing bell at the New York Stock Exchange. Marwin Holdings doing the honors at the NASDAQ, and it was a choppy session of trading following Wednesday's post-Fed rally. The Dow and S&P, though, still on pace for gains this week. That's the scorecard on Wall Street, but winners stay late. Welcome to Closing Bell Overtime. I'm John Ford, back with Morgan Brennan.
Yes, it's good to be back. It's one of the most important afternoons of March earnings season. We've got the results coming this hour from Dow component Nike along with FedEx. Micron, and Lennar. We're going to bring you all the numbers and expert analysis as soon as those reports cross.
Also this hour, an exclusive interview with Affirm CEO Max Levchin after a wild week of ups and downs for his company's stock, following news of Walmart's decision to partner with Affirm rival and upcoming IPO, Klarna.
Plus, we will talk about why a reported executive shakeup at Apple is such a big deal and what it could mean for shareholders.
Well, the earnings are already rolling in. Micron is out. We are going through it. But before we get to those earnings, let's talk market action with Vital Knowledge founder Adam Christofouli and Wealth Enhancement Group Senior Vice President Nicole Webb. Welcome, guys. Nicole, the Fed's tone was a relief to markets, but it seems that gets you only so far. How confident are you that this economy is decelerating but not shifting into reverse?
Yeah, we don't see data that supports that we are headed in this trajectory of recession. What we are communicating to clients right now, John, is that there is a cap on these rallies until we have clarity on the outcomes of all of this vacillating policy. And while yesterday was really supportive from Powell, we don't think it all stops after April 2nd. And so the setup we're communicating to our clients is that this year
you would be
Welcome back. Nike earnings are out, and Sarah Eisen has the numbers for us. Hi, Sarah.
Hi, Morgan. Well, there were some low expectations here that Nike seems to be surpassing. Revenues better than expected, $11.3 billion. And that marks a decline of about 9%, but the street was looking for more like down 11%. So that was better. A big earnings beat, 54 cents per share, was much better than the estimate at 29 cents per share, though margins were kind of soft to in line, 41.5 to 41.8%, which was the expected. Digging through some of the key markets here, North America, the home market, important, and also a beat at $4.8 billion. But China was a little bit soft, down 15% in China, in the greater China during the quarter. That is a disappointment. And I can tell you, after speaking to Matt Friend, the CFO, the China market is being reset. They are cleaning up inventory and making shelf space for some of the new styles. That's pretty much the story with Nike overall this quarter and where they are right now. The win now strategy, that's what the new CEO, Elliott Hill, is talking about. In my conversation with Friend, we are expecting guidance to come during the call, but it's only going to be fourth quarter guidance, not the full year guidance. And it will incorporate the new tariffs, the 20% increase of tariffs on Chinese goods. Remember, they make a lot of the sneakers and products in China. One sign I just want to share with you from the conversation, it's anecdotal, but I think it's important here because the numbers matter less in such a sort of dramatic turnaround. And that is the company is starting to see orders from wholesalers for performance categories and new sportswear almost fully offset the weaker sneaker declines in terms of these new orders. That is what they see as a leading indicator and some proof that they're seeing some early results, Morgan and John, when it comes to new products, some brand heat, some buzz. They had their first Super Bowl ad in decades, and the Peg Premium, for instance, is sold out. Starting to see some early results, and that might matter more to the street this quarter than usual.
Some great color. Sarah Eisen, thank you.
Thank you.
Shares of Nike up 4% right now. Well, joining us now with a reaction to those results is Oppenheimer senior equity analyst Brian Nagel. Brian, what a difference 24 hours makes. It's great to have you back. We were just talking about this yesterday. So I'm going to start right there. Your takeaway from these results we just got.
Yeah, look, nice seeing you again. Look, I think Sarah said it very well. That the real key here is this was a low expectation quarter. So these numbers, while they're slightly better than maybe the street forecasts, they're not reflective of a true healthy Nike. But again, they're against a low expectation backdrop. And really right now, we're seeing the stock here pop a bit after market. I think the key is, things did not get worse. And maybe we're starting to see some early signs of progress in this very significant turnaround that's happening at Nike.
Yeah, the commentary about new orders offsetting declines.
The second highest
for sure. But the weakness that they consider to see in China and this idea of a quote unquote reset, how important is that right now, especially in the context of trade dynamics and tariffs, which sound like they're going to start to get factored into guidance here?
Well, look, Nike in total, the whole company is a work in progress at this point, right? I mean, they've been resetting merchandising everywhere, including the United States. So when I heard, when Sarah said that for China, I mean, on the positive side, it tells me that, look, they're addressing issues in China as well. Now, China is very, very difficult to assess, especially for an analyst sitting here in the United States. What we've heard lately is, there's some pickup in China consumer demand. There's some stimulus effort on part of the government there. That's all positive. The negative, again, I think what you're alluding to, we just don't know. We have this trade war brewing, and that could very well at some juncture impact demand for U.S. goods in foreign countries like China. I don't think we've seen that yet, but that's definitely a risk out there.
Brian, it seems to me like if you're an investor, the important parts here are Are those wholesaler relationships mendable in the nearer term? And is Nike's innovation factory going to come back perhaps sooner than some might have expected? Are those the kinds of things that we really need to listen for to see if Nike management to start to lay out the benchmarks to measure their improvement and get that trust and valuation back?
No, John, that's exactly right. I mean, I'm going to say the same thing you said. I mean, the absolute two most important factors here are, one, product innovation. I mean, Nike's got to get back on its game of developing high-quality products that consumers want. And the second is, like you're saying, repair these wholesale relationships. I mean, Nike made a big mistake, as have other chains, going too far into digital. But again, I met recently with the company's new CEO, Elliot Hill. He's all about this. I mean, these were his two big messages. Bring product innovation back, reestablish these relationships with key wholesale partners. I was on Academy Sports, a smaller sporting goods chain here in the United States. I was on their conference call earlier today. They're talking, what they're really excited about in their business is they're getting the Jordan brand and they're getting more Nike product here in the next several quarters. So, there's a big retailer in the United States, very excited about what they're seeing from Nike. So, but I think that's exactly what has to happen here.
All right. See if Hill can continue to climb. Brian Nagel, thank you.
Thank you.
Well, I got breaking news from the White House. Megan Casella has the details. Megan.
Hey, John, that's right. So we are just watching this event just getting underway in the last few minutes where President Trump is gearing up any moment now to sign an executive order meant to dismantle the education department, and doing so fulfilling a pledge he's been making for years to eliminate that agency. Now, this is not something that the president has the power to do without Congress. There's already been some legal activity questioning his executive authority here. But what the White House can and will be trying to do is to sort of render the agency ineffective, potentially reducing the funding that's available to it. They've already cut the workforce in half. They say more job cuts will be coming, and they'll be eliminating any programs specifically focused on topics like gender equality, as well as diversity, equity, and inclusion. But the White House has sort of acknowledged today some of the limits to their authority, saying they're not going quite as far. Some of the critical functions of the agency will remain intact. That includes the public student loan program, as well as Title I funding to low-income schools and funding for students with disabilities. So sort of acknowledging some of those limits here, even as they have this event today to sort of make a big splash and show what they're doing. And just, John, one final point. I also want to flag that the president just in the last hour signed a handful of executive orders that we are just learning about now. It was not open to the press when he signed these orders, but reportedly, according to the wires, one invoked the Defense Production Act to boost the U.S.'s ability to produce some critical minerals, including coal. Another was about consolidating government procurement for both goods and services into the General Services Administration. So two to watch there that we'll be looking to get more details on. For now, we know the president is holding this event that you can see there to dismantle the education department at least as much as he can. Guys?
Coal. Interesting. Eager to hear more about that. Megan, thank you.
Coal is important to advanced manufacturing. A lot of people don't realize it.
Oh, well, of course it is. It's also sometimes dirty. Time for a CNBC News update with Bertha Coops. Bertha.
John, a U.S. district judge has just ruled that the Trump administration's response to a request for more details on those deportations of hundreds of Venezuelan migrants was, quote, woefully insufficient. In an order just now, Judge James Boasberg gave officials until March 25th to explain why the administration's failure to return the Venezuelans back to the U.S. did not violate his order. A senior Israeli delegation is set to visit the White House next week to hold high-level consultations about Iran. Axios reporting the officials are expected to discuss the Iranian nuclear program and possible negotiations between the U.S. and Iran. This will be the first time the most senior group for U.S. and Israel on Iran's nuclear program has met since President Trump's return to office. And less than 24 hours before a Trump administration deadline to shut down New York City's congestion pricing, Transportation Secretary Sean Duffy extended the deadline by 30 days. The matter also remains in court after the MTA here in New York filed a lawsuit arguing that the federal government does not have the legal power to stop that program. Back over to you, John.
Bertha, thanks. Up next, new signals on the home front as we await earnings from Lennar. We'll take a look at some housing data that surprised the street today and what it says about the broader economy.
And do not miss our exclusive interview with Affirm CEO Max Levchin with his read on consumer spending and increased competition from upcoming IPO Klarna. We still have a lot left to this show. Stay with us. We'll be right back.